Good morning, you're watching One News Now Markets. I'm Dani Laurel. Now, before we delve into the equity space, here are the top stories of the hour. Finance Chief Ben Diokno says the Bangko Sentral may pause policy tightening during its next meeting in May. Secretary Diokno, who sits as the member of the Monetary Board, says the BSP has, quote, done enough. He explains the impact of rate hikes has yet to be absorbed by the economy, considering that monetary policy works with a lag. Diokno also says non-monetary measures are more effective in curbing inflation. Last week, the Bangko Sentral raised rates by 25 basis points, bringing the benchmark rate to a 16-year high of 625%. Since May of 2022, the Monetary Board has hiked rates by 425 basis points to arrest inflation. The national government plans to launch a retail dollar bond offering next month. Finance Secretary Ben Diokno said the offering could range between $2 and $3 billion. He explained that the bonds will be treated as domestic debt and will be marketed to overseas Filipino workers and even residents in the Philippines. Diokno said he is confident that the offering, being tax-free and dollar-denominated, will get a good reception. Now, U.S. shares advanced last week, but will this revival hold with a shadow still cast over the markets? Here to chat with us, we have with us Luis Limlingan of Regina Capital. Good morning, Luis, and welcome back.
Hi, happy Monday, Danny. Thanks for having me.
All right, Luis, now I want you to give our viewers here a very quick educational understanding of what's going on in the offshore markets. How fearful are you? How contained has this been in the past couple of weeks compared to, let's say, the previous crisis?
Well, they're trying to reference this. I think its impact and size, it's much smaller, obviously. But I think in terms of what we have seen in the inversion of the two-year Treasury note, they're saying that this is much bigger than in 1987. Now, again, the context is much more different. In 2008, this was because of what happened in housing. In terms of what's happening now, I think the exposure is coming out because a lot of these banks had put a lot of their, I'd say, holdings into long-term notes. And because of what happened with the inversion of the yield curves, we saw that mark-to-market wise, on paper, it looked like a loss. I mean, it is different if you put in that perspective, given that you are not, it's actually a paper loss, it's unrealized, but because of, they have to record this on mark-to-market, and in theory, if they had to sell it, it would incur a loss. And that's what I think triggered a lot of these depositors to panic and get out.
But what about a real credit crunch? Is that really happening?
Well, Philippines, at least, we're not seeing that happen yet. We saw that actually the latest banking data for February was actually supportive of that. Non-performing loans were still steady. Loan growth, I think, not as strong. I think because it's getting harder to lend, and of course it's a higher base moving forward, and that's what we're seeing. They're saying that in the Western economies right now, the defaults might be increasing. Again, if it was a short-term effect of seeing high interest rates, then I think consumers could absorb it. But the longer they're going to see this, then it makes them very worried. And of course, the market was assuming that the Fed would be more dovish, when in fact, I think what forced them to rethink their assumptions was when Powell and Yellen made statements about them just really trying to fight inflation, and that's why we're seeing a more hawkish stance from them.
And now, we acted on the same path, no? So 25 basis point hike. Is this the highest that our rates are going to go?
Well, they're saying in terms of the Philippines, there could be maybe one or two more. In the next few meetings. However, the BSP did note that if inflation does stabilize, and if the Fed might suddenly become might pause, then they might do the same as well. So we're already at the peak or we're already close to it. That's what everyone is assuming, because they're saying by the second half probably there is even a chance for rates to even decelerate, depending again on how inflation plays out. Everyone right now is just being very data dependent at this point.
Okay, and back to the bank lending. No, I have the chart here on Bloomberg, and you can see, that decline at least since 2020. We haven't even gone as close to pre-pandemic levels. Give us an idea on what the direction is going to be for the Philippines, given all of these issues, so the offshore issues on the banking sector, the rates possibly, hopefully waning sometime soon. How is the banking sector going to be?
Well, I think banking sector on the in terms of what they're seeing with the banks, they're going to be quite selective. They don't want to what the shock in the US or in the West would snowball over here. For one, at least if they're not able to lend, they can actually put in deposits. Of course, they're going to still make a higher rate. Again, BSP is already at 6.25%. So at least they can park it there. Now, I think the problem isn't really with the banking sector, but with the general economy as a whole. Because if the banks aren't lending, what's going to be happening to businesses who still want to continue growing their businesses? As I said, short term, I don't think there might not be. It might not be much of a problem, but of course, the headwind will actually grow the longer this persists, because we can't, where else will they be able to get cash if they want to expand, in the medium to long term?
Let's go to the index and what the direction is going to be. Is this it? I mean, is this a trend again? When we look at the MACD, the momentum is towards the upside again, but today we're opening on the back foot. Is there a new psychological level here? Is there a recalculation given all of these? I think it's 70% probability of a soft landing now over in the US. How are we pricing in the index?
Well, I think right now they're testing 6.6. I think, traded at intraday this year around 6.350, if I'm not mistaken. So we've built some momentum, given that I think, or the hope is that we won't see any more, financial institutions coming out and this contagion spreading, right? But again, I think for now they're trying to build momentum at around 6.5 to 6.6 level. Again, it's quarter end, so we could see a lot of repositioning towards the end of the month, which is Friday.
Okay.
I think the earnings that came out gave a hint as to which companies are going to probably outperform or underperform for 2023. So we would see a lot of names changing in terms of volume is concerned. And that's what we're seeing in terms of the index movement for the last few days.
What about the foreign funds, Luis, and how these are going to be moving forward?
I think they're keeping into cash and fixed income at the moment and just waiting for the opportunity to come back. Again, if the Fed just keeps on raising rates along with the BSP and you're getting a higher rate for less risk, and I think that's why they're parking there. Now the problem is, as we have seen with banks such as Silicon Valley, is that if they buy into long-term placements, then it's going to affect their mark-to-market. So I think some of the strategy is to move it into short-term, so it's not really going to affect their book so much. And again, it's really a strategy depending on each bank, on how they think they're going to see rates and inflation move in the coming 3 to 6 months.
Comments on the first IPO of the year, which we saw in February. Medyo malas ata na it happened on a very tough week where rates are going up. Give us an idea of whether it's actually time to be entering Alternergy stock, given that it's trading below its IPO price?
But you have to consider a lot of these IPOs are, it also has to do with timing. Now, one is, I think it's an attractive IPO. The problem is right now the focus of a lot of these companies are with financial institutions and consumer companies, given that that's the play this year. They're not really looking into power, although if it's a long-term play, then you might want to reconsider. Again, if you want to build a power plant, Alter has expressed their intention to build like a solar plant, for example. This will take several years, but if you're looking for something that's going to move in the next few weeks, you're looking probably again at the banking companies and the consumer companies. Now, I think in terms of the movement, when they were raising, when they were doing the book building, the index was still close to 7,000. So I think the reason why we're seeing this weakness, it's just mimicking the performance of the index, and rightfully so. Perhaps with release of future quarterly earnings and updates, perhaps the market will slowly, reconsider. But I think now, because of what's happening, everyone's just looking at this IPO as a short-term play, when in fact it isn't.
Okay. And finally, comments on PLDT, which also released their capex outlook, but also their issues on the previous budget overrun spending, and also the earnings, which disappointed, at least when you look at the Bloomberg estimates. Are you feeling a little bit more secure, concerned about this stock with all of the things that they have announced?
I think the sentiment really of the market is they're just being very cautious at this point, given that, even with the announcement of the dividend, I think it was a 59 pesos. That was higher than I think most expected. We haven't seen people buying it into the stock. I think because everything that was reported in the fourth quarter was already moot and academic. So now they want to see that the budget overruns were brought up, how this is going to affect their capex spending, their movement, rather the company's trajectory moving forward. So I think that's why they're still cautious. But at least on the defensive side, we've seen that the stock price has already stabilized, trading at around a little above 1,300 at this point. So I think the investors have already discounted everything this point from the analyst briefing, and they're just going to probably wait until the first quarter earnings come out in May.
All right. PLDT trading at 13.35 this Monday morning. Thank you so much for all those insights to Luis Limlingan of Regina Capital.
Thank you very much.
And that's it for this hour. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.